Everyone, this is Brian Hoops here with Midwest Market Solutions and our internet video series, November the 10th, 2014. We've had a crop report today, so we're going to talk about that and look at a couple marketing strategies and ideas for producers. And we will keep it fairly brief tonight, so we invite you to check back at our website often, as we will put another one up here in another week or so. Before we get started, remind you that there is a risk of loss in trading futures and options, and it can be substantial, and each investor or trader must consider whether this is a suitable investment. Now remember, past performance, whether actual or indicated by simulated historical tests or strategies, is not in any way indicative of future results. Trading advice is based on the information that we believe are reliable and sources reliable, but we do not guarantee such information is accurate or complete and should not be relied upon as such. Trading advice reflects our good faith judgment at a specific time and is subject to change without notice. There's no guarantee the advice we give will result in profitable trades, and everything you hear is copyright 2014 Midwest Market Solutions. Well, let's pull up what's happening with the supply and demand report here. Now take a look at the screen. We'll have corn and soybean numbers here. So if we look at column here, we're just going to look at some of the fundamentals, and then we're going to look at some technicals. We have a couple columns, October column and the November column. So October, November, and then the change from last month to this month. And let's talk about it. First, we're looking at corn. Yield slightly increased by about 0.8 of a bushel from last month, from 174.2 down to 173.4. This is a surprise to the trade, which is looking for a small increase, as typically that's what the USDA does from if they increase from September to October, they normally increase into October. This is important, and I think we need to highlight that if there's some crop out there, and right now the USDA told us this afternoon 20% of the crop is still in the fields, there is some snow, bad weather, cold conditions, and likely will hurt the yield and harvest pace going forward here in those areas that unfortunately got weather problems today. That'd be the Dakotas, Minnesota areas, most of Iowa unscathed at this point. Acreage down just slightly from one report to the next, and production, overall production is a surprise to trade. 69 million bushels less than what the trade thought at 14.407. Now it really puts question in traders' minds going forward. Are we going to have an increase in production? Now we do not have a production figure in the December report. The USDA puts out only demand numbers in the December report, and then they come back in January with the final production figures. And now the trade's anticipating we're not going to see an increase, because we didn't from October to November, as yield that was collected later in the year not quite as good as previous. Now we can look at this production figure and anticipate maybe a reduction in the January report. If we look at the demand side of things, they told us demand overall 12.395 billion bushels of demand. We produce a crop of 14.4, so that gives us overall ending stocks 2.081, and we count this in, this demand number is part of our carry-in as well. So ending stocks, or the accurate number here to look at, 2.081. Ending stocks in November, 2.008. That's a drop of 73 million bushels from one month to the next. So the ending stocks figure was expected to swell, and it's gotten tighter. Now, things to keep in mind, this production figure, 14.4, it's a big number, and it's record large. This number here is ending stocks. Even though it's down from last month, it's constructive in that respect, but still larger than we'd like to see, and not a bullish number. So I think you have to keep in mind that we're not in a bullish environment, and things could change for the bearish mentality here, but we did have at least a positive step in that direction. In the soybeans, when we're looking at October soybean yield, 47.1, up slightly by about half a bushel an acre from October to November. Acreage down slightly, and our production only 30 million bushels larger than a month ago. Demand increased by about 31 million bushels, and ending stocks left unchanged at 450 million bushels. So again, look at these numbers here. Production 3.958, record large. Ending stocks 450 million bushels, near record large, and bearish numbers overall. We're in a bearish supply environment, but this wasn't anything that really shocked the trade into being bearish activity. All right, so let's look at the fundamentals now. Now we look at technical picture, and we've got March corn chart pulled up in here. A couple things to notice in here. Here's a downtrend line that we drew on the charts. You look at the August highs to the August 29th highs, and we came in here, and once we broke this trend line back on October 7th, you can see we rallied and pulled back close to checking it again, and then we started in a rally. So since the early part of October, we've been in an uptrend, and we can draw at least 3 points. We'd like to use at least 2, and if we can get 3 points on a trend line, I think that's the best use of our charts that we can have is looking at these trend lines. So we draw a trend line off of these October lows, October 13th lows, and again off the November 5th lows, which I think are some key lows right in here. So you can see we have an uptrend in the charts. If we take out Friday's lows in the March corn, which is 377 a quarter, the low from the November 10th today, 377 3/4, so that's a little support area right there around 377 and a half, plus it coincides with this uptrend line. If we take out these 2 days lows, we're also taking out the trend line, and that could be technically negative. Now remember, we have a bearish fundamental environment, not a bullish one, but fundamentally a bearish one, and we've got an uptrending market. So we kind of have a conflicting here. We don't have the fundamentals and technicals in the same trend. We've got them opposite of each other. So as this trend line remains strong, we'll probably see a little bit of buying. We've got resistance here from the highs from August at 394, and market may try and tend to rally up in here. In fact, today you can see we spiked up to 391 before selling back in this 382 area. So there's going to be resistance up in this 390. You can see right here, 388 for a high, 390 for a high here on this day, the 31st. So up in this area, we're going to see resistance, but the trend line will continue to move higher. Once we break this trend, then you've got the fundamentals and the technicals working together, and you can expect the market would be in a free fall at that point. I want to jump to wheat just to look at some charts here and kind of prove what we're talking about as market that's in an uptrend. Here's March Kansas City wheat. You can draw a trend line off the October lows. Here you got another October 27th low. You can see where we broke this trend line here late October, early November, and we've been down ever since. We dropped about 25 cents. Wheat fundamentally is a little bit of a bearish environment. Now technically it's in a bearish environment as well. So this is what potentially is going to happen with corn and soybeans, and so we want to make you aware that the fundamentals, technicals, what they're showing us. Now let's look at soybeans. All right, here's your uptrending charts. To get our 3-point trend line, we go here to October 13th on a March chart, October 20th, and then again on this November 5th low is kind of an important low, and we get our uptrend line in here. Beans have a little bit more room. In the next day or so, we're going to have to get down this 1013 area before we break a trend of the uptrending market in here. So as this market, it's in a little bit of an uptrend. Still looking at South American weather, exports, that sort of thing, as something that we're keying off of. But there is your technical points to watch. Again, this is not an overall bullish environment, but it is, if you're holding old crop in here looking for a rally, I think you can just draw some trend lines on your charts here and come to the same conclusion I am. March is about 1013, 1015. That's a key technical area to watch. Now if you're looking at new crop, we'll go December 15. Let's draw some trend lines here if we can. We'll go off this low, and it's a pretty steep trend line. If we use that same low here on November 5th, kind of a very important low, there's your trend on December new crop corn, and on November new crop soybeans. We'll do the same thing here. Draw some nice trend line charts. There we got almost 4 points off of that trend line. So again, if you're looking at thinking about making some new crop sales, wondering if this is a good time, good price level, again, you're in an uptrend, so you can maybe let this thing run with trailing stops below this trend line. And if you're a brokerage client of us, we can help you out, put these orders in, and identify where these support areas are. All right, we're going to wrap up here for the night. It's been a short one, but we'll be back here again with some more comments. So feel free to give us a call. Our number, let me pull up our information here. Again, is there's our information, our internet video series, our home office in Springfield, 417 501-5132, and our branch offices in Storm Lake and Yankton, South Dakota. So check those out. You can go online, MidwestMarketSolutions.com. Have a great evening, everybody. Thanks for listening, and we'll talk to you soon.